Did you know that you can actually get financing from a home seller? Let's talk about that in this episode. Welcome everyone to this episode of the AskJasonGelios show. I'm Jason Gelios, Michigan Realtor. I really appreciate you guys tuning in to this episode. Somebody had a great question about what is seller financing, right? What does this mean? Does this mean that the seller gives me a loan? How does this work if I'm a home buyer? How do I approach them? What are the pros and what are the cons? So I'm gonna definitely dive into that, but I ask this in every episode, and actually almost every video that I do. If you're not following me on social media, go ahead and check out those links in the description below and visit my website. It's all about therealestate.com. There's a pop-up form that you can fill out to receive this in your email once a week, and it's spam free, I promise. Now, let's dive into what seller financing actually is. So seller financing is, in a nutshell, when a home buyer and a home seller have an agreement to where the home buyer directly pays the home seller. It's pretty interesting. I don't see it often in my area of Southeast Michigan, but it doesn't mean that it's not out there. Now, I'm gonna dive into actually how this works. And I put together an outline here to help keep me on track for you because there's a lot to cover. Okay, how does seller financing work? Well, the buyer and the seller have to agree to actually do this. And it leans more towards the seller wanting to offer this versus just having the home buyer take out a mortgage and just purchase the house. So the buyer and seller have to agree. If they agree on that, then they agree on terms. So, okay, what's gonna be the interest rate? What's going to be, the term? They put together what's called a promissory note, and both the buyer and seller sign it. The buyer does pay a down payment. They have to pay some form of down payment. Now, the good news, this is a pro for the buyer, is that there's no standard down payment amount. It could be $1,000, which you wouldn't want to do that anyway, but it could be as low as that, or it could be $50K. It just doesn't matter. It's mainly up to the seller. The buyer makes monthly payments on the loan, so they pay the seller direct. They don't have a bank that they're going through. They pay the seller direct per month. Okay, that payment should include property taxes, insurance, things like that. The buyer pays off their loan, so they pay off the loan, and what happens is the seller signs the deed over to the buyer. Pretty cool. There's 4 types of seller financing that you should be aware of. There's the promissory note or mortgage that I told you about, right? Has all the terms and everything. There's a deed of trust. However, that is when the title is held by a third party, because the first option, the promissory note or mortgage, the title is typically held by the seller until the buyer pays it off. Then you have a third one, which is a contract for deed. The buyer does not receive the deed. The title they don't receive the deed and the title to the property until that loan is paid off. Okay, which is similar to the promissory note that I mentioned to you. Okay, now another one is lease-to-purchase agreement. That's like a rent-to-own type deal. I don't usually advise that on a home, but everybody's situation is different. It just depends, especially now with housing inventory being lower and rent is high. Now, I want to share with you some advantages of seller financing, the good stuff, right? One, home buyers don't have to jump through hurdles through a lender. They don't have to wait for that process. You can usually close faster. You have a shorter due diligence period, okay? Which means that it's just, you don't have to have an inspection. You don't have to have it appraised. Although, if you're a home buyer, you should still do those things. Don't ever waive a home inspection. Don't ever waive it. I don't care. Just don't ever waive it. Here's another one. Another pro is that there's no minimum down payment. How cool is that, right? The closing costs are typically lower because you're not dealing with a traditional lender. And you potentially have better investment returns. So again, you're paying a lot less, right? You can have more consistent cash flow on a property. That one applies more to sellers. How you have money, it's kind of like being a landlord. Now with pros, there are cons, and so here's some cons I have for you. Usually seller financing costs the home buyer more. Usually the interest rate is higher and you're paying more in terms of interest rates and the overall cost. Now, a second one is you could have high balloon payments. You could have a balloon payment clause where you may be faced with, the home buyer may be faced with paying back a large sum. Another one is it's potentially high risk for sellers. So you have a high risk for sellers. If the buyer defaults and they don't leave the property, then you will have to begin the foreclosure process, and that could be ugly and drawn out, okay? And then, existing mortgage issues, right? Again, for a seller where if you have a mortgage on the property, there may be some existing liens from a contractor or whatever the case is, okay? In a nutshell, this is what seller financing is. My personal opinion, or I guess professional opinion, is I don't recommend it. Many times sellers want to just sell their home and be done with it, right? They don't want to be, in essence, a landlord by offering seller financing. More savvy sellers might be more open to this, where they want to make that money back on their interest. Usually you see people with higher wealth able to actually, offer seller financing because they're not actually selling the house. And I know some people will say, well, the home buyer is buying the house. Yeah, but they're still the seller is still on the title until that buyer pays it off. And so you just want to be careful as a home seller thinking of seller financing. I would still run their credit and make sure that everything's good there. Maybe even check references, kind of like what a landlord would do for a tenant. But I think it's a great option because if you're a home buyer too, many times, and I've seen in my local area of Southeast Michigan, where many times home buyers who can't qualify for a mortgage will try to do seller financing, or they'll try to do a land contract with things like, or lease to purchase until their credit gets better. So there's that option. But in a nutshell, this is what seller financing is and some of the pros and cons. If you liked this video, if you found value in this episode, go ahead and share your thoughts in the comments below. If you didn't like the video, share that as well too. Would love your feedback. Otherwise, I'm Jason Gelios, Michigan Realtor, and I hope you guys have a great week. Thanks everyone for watching this episode of the Ask Jason Gelios show. Be sure to visit the links in the description below to pick up your copy of my real estate book, Think Like a Realtor. It's a little book about buying and selling residential real estate through the eyes of a realtor. It's real world advice, tips, whether you're a new agent in the business or you are a home buyer or even looking to sell a home. This is great advice. So I really appreciate it if you guys visit those links, pick up your copy, and go ahead and share a review, good or bad, if you like it, if you hate it, okay? But get your copy today. Thank you.